Ladies and gentlemen, boys and girls, we are back. We got another indicator video today. Again, guys, these are just like an educational breakdown. This particular one is going to be a volume profile. Now, of most indicators over the years, if you've ever watched me, I've made fun of quite a bit, all just poking, just joking around, right? And I don't actually mean anything bad. This particular one, I do kind of like. I kind of like this one. My main problem I think I have with other indicators is there's a lot of like, this is a buy signal, this is a sell signal. If it were ever that cut and dry, I promise you, I would just have a video about that one, and we would be talking about how much money we all made that time. That would just be it. So we are going to jump back in. You do see it right here, these bright teal and red bars. Kind of like, well, Spider-Man volume bars. I should have two on here. I wanted to break down. Let me just show you guys really quick. I took the other one off. Okay, so there's volume profile, and then this is VR. So it's a visible range volume profile. The only difference is you can go and just add volume profile to your charts. And all it's going to do is you can go into the inputs, change the settings for how many candles back, not days, candles. So like the last 200 candles. So I'll get into it what it actually is. But for this particular video, I'm going to have the visible range. So as I adjust this, if you wanted your volume bars to look like that, you'd have to count these candles, go back into your volume profile, and just make it that long. Okay? Okay, so first and foremost, what exactly is the volume profile? Simple terms, it's the profile. It's a charting tool to plot where the volume traded at each price level over a specific period of time. Like I just went over, mine's with a scroll of the mouse, or you can just input your exact one you wanted. So this data is pulled directly from the market transactions, just showing us where the majority of buying and selling is happening in real time. As you can see, we'll call them nodes here. You can clearly see where, obviously, the further left on the screen, the more buying and selling took place. Further right, whole lot of nothing. Okay. Now, I guess one of the other big differences, we call them Spider-Man candles. They're on the right side. They're on the price axis, where if you've ever just seen normal volume, and you might hear people say, oh, today had a lot of volume. Had a lot of volume where? You know, it just kind of gives you that extra little bit, or just a different view of the overall markets, because you can just look at a volume candle. Typically, volume candles are along the bottom right here, and let's say today's had a huge volume candle. Cool. That's all we could say. Right here, we might be able to say, oh, it had a lot of volume around the 569 mark. Just in that, in general, there is something. I'm trying to think when I want to go over. The one thing that makes this not as easy, or not so much an indicator, right? Like when I think indicator, I think a line or some real equation that's giving you a buy-sell indicator. This is just, I would almost rather this be under a different category, because there's some things that they're in the indicators part. I get that. There are just some that aren't really giving you a buy and sell indicator. They're giving you more data. They're giving you a way to interpret things, but it's still very much your own brain, your own trade doing the thing. Almost like ChatGPT. Everyone calls it artificial intelligence. It's not. You're still in the cockpit. You got to type everything out. This is just giving you a piece of data. Hey, a lot of people were here. What are you going to do with that? It requires a little bit more brain power, at least 2 brain cells above the indicator. It just says buy or sell. There's a big problem with this, though. Kind of. People will get into trading strategies in a little bit, so let me just pre-warn you now. They'll talk about breaking above a high volume node, and this might get into now intraday trading, a little bit more important. Swing trading, this is where I think the line kind of gets blurred. We'll probably go over this. We're talking about institutional traders when they use this as well. But the longer you stay in an area, obviously the higher that's going to be. So if we were to go directly horizontal, let's say we had a major price spike up and it came back down, horizontal, huge spike up, came back down, horizontal, you would see it an absolute crazy amount just because the time you have allotted there and the amount of time we spent there. We could have used and abused that whole thing. It's still an area of attention, much like when I draw zones. But the one thing I've seen, if there's ever any discrepancies, it's going to be when they have the visual one on there and they just give it a little bit too much time. Because look right here, obviously there's a lot of volume right here on the chart, right? A ton. Look how much time we spent there. We went up, we went down, all the way back up, completely out of it, right back down into it. And we're going to get into that in a second as an actual strategy. But can be deceiving because it can make these nodes look smaller, less important, when really they are more important. More immediately important, I guess. Anyway, I do take notes on these. We'll jump back in. We'll get back on track here. We'll stick to the queue. Okay, so as a trading strategy, one common approach is to identify the points of control. You've probably heard some YouTubers say that. Again, this is where they start to stick their pinkies out. They learn a new word. This is the POC. It's cool when they learn the word, like the verbiage, and then it's like that next level when it's an acronym. Like they just expect you to know it. You guys ever know like a YouTuber that just comes out, starts saying random letters, and like, ha, you don't know what that means? Peasant. Anyway, point of control, the price level where most of the volume has been traded, and you'll just see like right here, you would call this a point of control, just that volume nodule right here, just the giant old candle. Okay, no need to overthink it with some fancy words. On the subject of fancy words, if for some reason you're on here, this is another part I would just call the language of money. Some of these things are designed, I think, to be more complicated than they are, just to keep the peasants out. But all you really have to do is just ask a few more questions than the average person, and you'll nail a lot of this. Okay, so they'll use the POC as a potential area of support and resistance. Again, hey, there's a lot of people here. We know something's up. This particular one, we have a lot of sideways time right here. Like if we actually were to switch into my futures, you'll notice there's zones right inside here. We have a lot of just buying and selling all inside this, but I wonder if we just switch this out. Let's let that update. I wonder if we could really... I wonder, because a lot of times we'll draw these zones, and you'll see a lot of the point of controls are going to be these zones. It probably gets down to more intraday. We can dial this down a little bit. Looking for that point of control. You can be selective with your data. But see right here, you might think, okay, you might take that information outside of my yellow box that I drew for you. You would take that and think, hey, here's a point of control. Here's where a situation's going on. And so I draw out zones. But think of it this way, an area of attention. There's buyers and sellers meeting here. Who knows why? You just know there's a crowd. Go jump in that crowd and see what's up. If you had a basket of apples to sell somebody, you'd want the crowd. Okay, that's liquidity. That's where the action's at. It's where you can make moves. So it's not a bad way to maybe fine-tune the very basics you learn in the beginning of just support and resistance of, hey, it went that low and it went that high. Buy low, sell high. Why does that often lead to buy high, sell low? Buy high, panic sell at the bottom. Anyway, okay, so coming into this point of control, you might look as a buy. I guess if it were to break there, that would be your breakout point. For instance, if we had this on the upper side, if it were to break it going up, I guess same thing. You would look for the breakout. We didn't really. Hang on. Let's give it a little more data to go off of. This. It's not the best example, but if you look at what I have on screen, this is what I meant by earlier. We have a lot more time on this bottom axis right here, so a lot more volume just naturally taking place. Where you have this right here, I feel like this probably could have. If it wasn't for all of this making this, you see how this looks less important right here? Very much still a breakout strategy could have taken place. And maybe you just miss those trades and you only take trades like this and you tell everybody you wait for that picture-perfect trade. Maybe you really do. I don't know. That's the one nitpick I have about this particular one is that I wish there was a way to almost EMA this thing. Give it some reference to a future reference, a recent reference, I guess. Give it a little extra math on that side. Okay. So I mentioned this a little bit earlier. Now, day trading versus swing trading. Day traders, the volume profile can be used a lot more, I think, in intraday trading. Just identifying just the key levels. VWAP's very, very, very popular. I don't want to say it coincides with it, but there's a lot of indicators and a lot of sight on intraday we're paying attention to here, because when you get these runs up like this, and oftentimes a lot of people think a run up. Let's just go to S&P. No more zones. Okay, so now a lot of times people think this run up is momentum and buying, when in fact it's a lack of selling. So you can get a pretty decent move just off of no volume in general, but where are you going to get in trouble? Where's the volume actually located at? Again, where's that liquidity? Intraday, there's a lot of noise. There's a lot of news, a lot of things being thrown at you. This, I think, can help simplify it. So I think a lot of day traders, I would bet a lot of day traders actually use this. And I don't know if I have a problem with calling it an indicator. I think it's I'd rather call it just a data point. I call this an indicator as much as I do the candles. The green candle. There's a green volume profile bar. That's what it means to me. Swing traders. Understanding this is where this would fall back into one of the cons, because this wouldn't be an indicator someone brand new probably uses. I think it could help the new people. It could also just confuse them. They wouldn't know how to do it. Understanding how institutions, the bigger players, they can't click the market sell and buy button. So they do have algorithms, but they put in their parameters each day, each week. Say, all right, if we meet this criteria, start entering in. Or, hey, I need to have 1 million shares of this. Start filling at around this price. I still want a good deal. I click market buy 1 million shares. I'm going to have a very, very high average cost, and I'm probably just going to end up providing liquidity for everyone else to sell in that immediate time. So understanding that, because sometimes it could take days and weeks for an institution to get. Imagine Goldman Sachs or BlackRock wants 2 billion shares of something. Okay, they could market buy that. It'd be the only way AMC ever gets to 100,000. They would just buy up the whole entire order book and still have the buy order filling. But this volume profile on that can probably give you an edge as to why is there a lot taking place. Again, that area of attention. The more time you give it, the more data you have. Which can be I guess, like I said, a double-edged sword, because you might, or double-edged blade. I don't know what the saying is. Again, you'll look at an area like this and think, here we go. Did we spend a lot of time there, or is that an area of attention where the buying is? That could probably sound really contradictory. Just watch out for that. You know what I'm saying? I'm not gonna repeat myself again. I do get this question more often than not. Do institutions use volume profile? Do they use it to identify zones? If you've been following me for a while, every time we've had volume profile up, you'll see it line up with zones. So a very popular question is, do I use this to find zones? Have I ever done that? And then same thing with institutions. And I would say the answer, it's tough to say, do institutions use this, yes or no? Because there are... And now that's a statement for all indicators, by the way, because you might have some mom and pop shop, some small one that has an algo running 52 different indicators. And technically, an institution is using it. This particular one, I would say, is probably a mid-level institution. I don't know if that's a tier video we can make one day. The bigger ones probably don't need this because they're buying they're buying the data. But I would say they absolutely do use this. Probably again along with some other tools. But like I just said, it's a great way to kind of see if you know how institutions play the in and out game. You can spot it on things like this, on the charts in general, on volume profile where it's being collected. Maybe finding market imbalances. Again, imbalance to the upside right here is just because there was no sellers. All right, now it will go green with more buyers or less sellers. They both equal. Doesn't matter you add more weight to one side or taking weight off the other. That scale still gets tilted. So you can kind of see, hey, what's the meaning behind this? Is it a lack of seller, lack of conviction, or are we buying into this and are we going to town? Look at high volume nodes, maybe low volume nodes. Again, the bigger institutions, they'll use things like order flow. They'll buy your order flow. They have time and sales. They have a lot of other ways to see this exact data. So to say it's all they use, no, that'd be crazy. But to say what they do use isn't almost a form of this, I think would be silly as well. So this one really isn't one to make a 4-hour production about. Again, it's just a good structure of volume, just like anything else. It has its pros and cons. It's a lot easier. It shows off more than just traditional volume bars. If you just have a support and resistance style strategy, wouldn't be bad at all to have this on your charts at all. And again, this is a great one to use on multiple time frames, and that's why I like the visual range. You can zoom in, zoom out, and just let the data kind of go to what you're doing. It's just not. The downside is, hopefully after watching this, you can use it. If there was a con to this, and let's say I'm talking to someone who's brand new. I assume you're brand new because you're YouTubing indicators. That's something a very new person would do, and I hope you're on the right path. This, I think, could give you enough data that you just don't know what to do with it, and then you end up making a weird decision. So we're gonna put that in the cons category. People love to say it predicts price movement. Not really. It shows where a lot of action has taken place. That action could be done. So without an understanding of how markets actually work, you might just be on the wrong path. So it's a great one for those that know about the markets, if that makes sense. I think there's a lot of people that have strategies built about this. I've seen some real silver tongues out there really trying to kind of sell this one, and I think it can be very misleading. Now, I have it on the S&P, which is the most liquid product out there. I couldn't imagine even trying this on a penny stock or just something cheaper without any volume to support this. What I'm showing you is the best possible scenario on this. That this thing's liquid no matter what. The S&P is always going to have some kind of volume. Maybe you dry that up a little bit, and yeah, all of a sudden all you have are the large nodes and the smaller nodes. And maybe you think, hey, there's your area of attention, and that's where a lot of the strategies do come from. But man, let's just imagine all these candles didn't exist. You have this giant candle right here. You have this small one and this one. What are you going to do in the meantime? And what if you have this one right here and this one right here and all the others are gone? You know what that means? You stop out. You want to get out of this position? No. Good luck. You got 3 people here. And it's going to, there's your next fill. It's going to be that next node down. So again, overall, hopefully I explained this one to you. I tried to make it as simple as possible. This is one that could probably just be summed up by its definition in itself. But I don't know. This one is actually, I don't have a tier for this. I don't have a grade. Maybe I do a tier system where I put up there. This one would rank it up there. The indicators I have problems with are the ones that give you just a clear buy and sell signal. Those don't exist. If they did and they worked, again, guys, why would paying student loans be a problem? Why would you ever take out a student loan if something that easy existed? And I mean, even with a degree of success, even a 50-50, we would be all over that. Why wouldn't you? We would all be rich. They have to find a new way of money. Anyway, think about that. I'm going to wrap it up here, and I will see you guys in the next one. If you enjoyed this, if you enjoyed the indicator breakdowns, let me know. You could show me that by subscribing, but let me know in the comments down below either your favorite indicator, your best indicator experience, and one you would like to see next. I'm trying to make these all just completely unbiased. I'll tell you what it is and tell you what I've seen just in general. But anyway, do all that, and I'll see you guys in the next one.